Yo, what up, gang? It's your boy Rick, aka Iconic. Back with another video. This is gonna be different. This is gonna be um, me talking to my conscience, aka my emotions, aka my fear, aka my greed. Um, yeah, so pretty much my conscience is gonna be analyzing my trades, asking me questions, and I'm gonna be answering these questions if I could even answer these questions. And if I can't answer these questions, that means I'm not doing something right in my trading. And that's the reason why I keep failing these challenges. And, initially when I created a YouTube channel, it was to kind of document my journey. And I think I got caught up in, when I see people post their profits, I feel like I need to post profits. So it kind of kept me from posting videos because I'm not making profits. Every time I would make something, I give it right back. This past Friday, I was up $800 on the funded challenge, and then by the end of the day, it was down to like $37 profit. Right? So I'm gonna show you guys the trade history report. I'm gonna show the trading plan that I should have been following. A lot of the trades was done on the phones. So let's get into that interview. All right, so Mr. Iconic, you said you want to be a professional trader. You've had your business plan for some time now, or your strategy, or whatever you want to call it. You do have everything documented, but yet you're telling me that you're consistently losing on trades. So let's go ahead and take a look at your trade history report to see if you've been following the plan that you've outlined in your report. So the first order of business, we're going to look at the trade history, and then we're just going to kind of pick a few losers. We're not going to pick any of the winners. We want to analyze what's going on in the market as far as your losses. Okay, so let's look at the trade history. The first one we're going to look at is a loss for $187.50. That trade was taken on 12/20, 13/15. That's going to be PM, right? So we're looking at what, 1:15 p.m. You traded XAGUSD, which is silver. You did a buy. You did a zero point 0.5 lot. You had your entry. You had your stop loss. You had your take profit. So you did pretty good in terms of setting your stops and take profits. Take profit is not mandatory, but I feel like your stop loss is mandatory because you don't want to get caught up in some news trade that wipe out your entire account. All right. So with that being said, what we're gonna do, I'm gonna go ahead and I'm gonna plot your trades on the chart, and we're gonna see where you got in on the chart, where you exited, aka got stopped out or closed it manually, and then we're gonna look at your trading plan and see if the trades aligned with what you did. All right. So the first one, let's go ahead and we're gonna move this to the side, and then we're gonna look at the time. So it's gonna be 13 on the 20th of December. And in terms of 24-hour clock, it's going to be 13:15. So let's pull that up. We do have it in here already, the 20th. Let's hit go. We're on the 15-minute chart, right? We're just going to mark a line right here. So it looks like you entered the trade on this candle here. Looks like you said you did a buy, and the price you got in was at 23.779. Let's go ahead and get your buying tool. Let's go ahead and plot these numbers real quick, right? Entry price. Okay, you got a stop loss. And you had your take profit. All right. So, Mr. Iconic, first thing I want you to do is go ahead and tell me, why did you enter into this trade? Well, first of all, thank you for analyzing my trade history. I want to thank you for taking time out of your busy day to help me out or to analyze the charts, and hopefully I can walk away with a better understanding of myself, and a better understanding of what I need to do. All right. So, okay. So to be honest with you, I think I took this on my phone. I really can't remember. Well, Mr. Iconic, you're supposed to be a professional. You're telling me that you want to be a successful trader. You want to be able to take care of your family. You want to be able to teach others to do what you do. You want to take care of your parents, your wife's parents. You know, these are the things that you told me. And now I'm asking you about your first trade that you obviously got stopped out on, and you can't tell me why you entered into this trade. Well, it looked like it was breaking out, and so I just jumped in. To be honest with you, it looked like it broke out. I'll draw my line right here. So I saw that breakout right there. Looked like it was doing something. So I went ahead and I jumped in. I set my stop loss. Wasn't necessarily beneath structure. And then it stopped me out. That's what I did. All right. Well, now let's take a look at your business plan or your trading, whatever you want to call it. All right. Let's take a look at that. And we're going to see if you had traded from your house on your laptop, how would you have analyzed the market? Let's go ahead and pull that up. All right. So, Mr. Iconic, your trading plan calls for you to trade between 8 a.m. and 5 p.m. Eastern Standard Time, which is 1 p.m. to 10 p.m. UTC. Looks like you did that because this trade was taken around 1 p.m. or something like that, right? You said that you're going to analyze the big picture on the H4 and the daily chart. You also said you're going to do some intraday technicals on the H1 and the 15-minute. Looks like we're already on that 15-minute chart. You stated that you're going to look for short-term support and resistance, highs and lows, and you're going to utilize your Fibonacci levels. You stated that you're going to be looking for a liquidity grab with a break of structure and a pullback to your 45% or 50% fib or the 68.78 fib. You're going to be looking for candlestick patterns such as morning stars or evening stars. And then you're going to obviously, make your entries, right? We're not going to read the fine details. You know your trading plan. You designed it. You came up with it. Now let's take a look at your charts. And then we're going to go back and see if this looks like that trade that you took. You have here a liquidity grab, break a structure, market made a move. You draw your fib from the low to the high of that pullback, and you enter it on a 50% retracement. That looks like a good trade. Your second one, based on your trading plan, liquidity grab, break a structure, market broke up. You took your fib from top to bottom, pull back to the 50%. Looks like your target was met. Your next trade looks like a slight liquidity grab, break a structure, market took off, pulled back to the 68.78 fib. Wow. Okay. So none of what I'm seeing here looks like the trade you showed me. So this one you have looks like a double bottom, possibly triple bottom, break a structure. Looks like you may have done your fib, market pulled back to the 50%, market took off, hit your take profit. Let's just look at the last one. You had equal bottoms, break a structure, market took off, you did your fib, market came back to 78 to 85, right? So it looks like you had an 85 year. Well, yeah, that was done when I was just doing testing. Right now it's just a 68, 78 fib. So I just never deleted this because it's still within the same parameters. All right. You also have 48, 58. Again, this was just testing that I was doing, but it's the same thing. Liquidity grab, break a structure, market took off, pulled back, target was met or almost met, right? Now let's go back and analyze this chart and see what you could have done or what you should have done instead of fucking around. All right. So you came into the market, the first order of business you should have did, look at the breakout. So looking at your charts right now, just going by what you drew, first thing we notice is a break of structure here, right? We notice this break of structure. All right, we'll just put it there. We also notice what looks like equal bottoms. Again, Mr. Iconic, this is your trading plan. I'm just drawing up what I see. All right. So you had a double bottom here. I guess we could just do a quick label. Double B. Okay. We had a break of market structure. Let's do break of market structure. Okay. Market took off. So different ways I've seen you draw. I've seen looks like you drew from bottom to top and also from the breakout to the top of the pullback. So we're going to start off with bottom to top. Had you done this, you wouldn't have been into this trade. So that would have been a loss avoided. If you had went from your breakout candle all the way up, looks like it pulled right back into your 50% Fibonacci level. Looks like that would have been a great trade for you. And it looks like your first take profit would have been hit. As I'm looking at the market, it did look like it hit the minus 50%. So that's your trade one. Looks like that would have been an in the money trade as you followed your trading plan and not did some bullshit trade that looks nothing like what you want to accomplish. Okay. So that's your trade number one. Again, this looks like it's a part of um, your trading plan. I'm just here to analyze the data, analyze your losses of what you're doing and why you're not succeeding. But it's obviously from your first loss, you did not follow your plan. Now let's go ahead and remove this and let's plot your next loss. Your next loss looks like it's about $249. Same XAG USD. Looks like you just sold, like, just looking at the time factor here, looks like 14:07, which is around 2 p.m. Uh, this just looked like some impulsive trade to me. I mean, you lost and it look like you just jumped back into the market based on greed. You're just trying to, literally what you're doing, you're fucking up. You bought, you lost 187, and then looks like you sold right after that. Why did you sell? All right. Well, before you even answer that, let's go ahead and plot this on the chart. Looks like you're at 14:07. That's the time. Same day. This is straight bullshit. Not gonna sugarcoat it. All right. So here we have it right here. You took the trade here. You went in for a sell. Let's get these numbers on here. So your entry price was 23,708. Your take profit was 23.291. Your stop loss was at 23.791. Yeah, okay. So let's go ahead and plot this. So I'm looking at the 15-minute chart here. And let me just double check and make sure I put your numbers in. Your stop loss is 23,791. Your take profit is 23,291, right? And your entry price is 20. Bruh, like, I don't understand this trade. It looks nothing like your previous trade. It looks nothing like I saw on your trading plan. Why did you take this trade? Well, Mr. Conscience, Mr. Fear and Greed, what happened was, um, yeah, I noticed that the market looks like it was about to drop. It looked like it was dropping because, it took me out and I think I got mad. And I saw that candle look like a bearish engulfing. Okay, but I don't see bearish engulfing on your trading plan. So why are you trading bearish engulfing patterns? Well, um, well, shut the fuck up. you're fucking up. Period. This looks like nothing that's on your trading plan. It goes on. It looks nothing. I don't see anything that says bearish engulfing or bullish engulfing. Entry on LGQ setups, we can place buy/sell limits or just enter once price is showing signs of weakness /Prince rejection candles such as a hammer or shooting star at our fib levels. Stop loss if we enter off our 45 to 50 fib. Our SL will be placed about 10 to 35 pips below the 50% fib. Stop loss will be based on what time frame we are trading, on how much is our broker's spread. Take profit or TP will be set at a minimum 1 to 4 risk to reward ratio, which typically aligns with the high after the market made a pullback towards our entry. Note there are also predefined fib levels that can be used. So again, I really need for you to explain how you came up with this trade, since it's not a part of your trading plan. Obviously, there was lots of bulls in the market. This was definitely a bullish momentum. Why would you feel like this is not just a pullback to the upside? Okay, I get it. I'm fucking up. I get it. No, you don't get it because you have been doing it for years. It's obvious you need an ass whooping. You need a mental. Listen, you're effing up. Your family needs you. Your family deserves better. There's people that you have not helped yet in life. There's people that's coming in your path that you need to set a good example for. And right now, you're not doing a good job. I'm not impressed. I am not impressed. Right? If Diarrhea was a trader, it would be you. Because this is pure shit. All right, let's move on to the next one. Your next loss, $342. Okay? Let's go ahead and plot this on the chart. You lost $342. Wow. Same day. Let's go ahead. Looks like your time is at 22:42. Let's go ahead and get that in here. Same day. Can't believe this shit. 22:42. Let's go ahead and plot this so we know what's going on. On this one, looks like you did a buy. You did another buy. Let's go ahead and analyze this. Let's get our buys up here. Let's go ahead and plot your entry price. You entered at 24.194. You had your take profit at 24.599. And you had your stop loss at 30.88. I'm sorry, 23.081. You might as well not even trade with a goddamn stop loss because you are, yo, bro, you're like super effing up right now. Super effing up. Okay? So this is the trade that you took. Now walk me through the reason why you took this trade. Right? Because the 15-minute is supposed to be your entry, where you're taking your trades from based on your trading plan, right? We're not even going to go to the 1 hour because it's not going to change that much as to why you fucking took that trade. Let's get back to this, right? Why you took a buy. Let's go back to the 15-minute. Look like you're just guessing this shit. So, Mr. Iconic, please explain to me and explain to the people, why did you take this trade? Let's move this over a little bit. Let's just get it right. Numbers might be off a little, but it doesn't matter. You got to stop the hell out. Let's see if it aligns with anything that you showed me. Anything. Well, what I was looking at was Uh, what I was looking at was, okay, I know what I was looking at. The market came down. It failed to reject. Well, Mr. Iconic, I'm not sure if that was a part of your plan. No, yeah, I think it was. I think it was. I might have deleted that image. I think I did. Um, but okay, so let's draw your fibs because you love the fibs. So we're gonna take your fibs from this high, this low, to this high, and see how you got into this trade. If you got it on this candle here, let's move this red line. You got it on this candle, this bullish candle. I don't see anything showing me at this particular moment a rejection off the fib. Yes, we noticed these candles here, but these came afterwards. At the time you took this trade, this did not exist. And I bet you got happy when you saw that pull back to your 50 and the market started pushing up. You probably got so happy you thought you were in the money. You thought you were in the money. So instead of recognizing that you fucked up, you stayed in the trade and end up getting stopped out. Like, again, this this should have only been one trade for this day, and you would have profited nicely. And you stop for the day. But yet you wanted to do multiple trades for the day and end up with losses. So I really need for you to do some soul searching. I really need for you to stick to the plan. And I guarantee you stick to this plan in 30 days or less, you'll be a lot more advanced into your mental. But yeah, well, to be honest with you, man, I've been working on my mental because I've realized that this shit is like 99% psychology. And I've been listening to two books and I'm really loving them. I'm really loving them books. Well, why not show the people what you've been listening to? All right, bet. I could do that. I could do that. I'm gonna pull them up and I'm gonna slide them right on the charts. That way people can see it. Let me jump on my Audible. One of them I already listened to like twice. So we have Mastering Trading Psychology by Andrew Aziz and Mike looks like Beecher, right? Mastering Trading Psychology. I really love this book, man. This book is like it's telling a tale. It's like telling stories, right? On how traders mastered their psychology and was able to go on from being rookies and disastrous traders. I'm also loving, and I've listened to this one. I keep hitting play. I've listened to this one about 3 times now. It's called Best Loser Wins by Tom Hugard. I love this guy. He's on YouTube also. He's a high stakes trader, right? This one I've listened to several times. It's about this book is 6 hours. The first one is 8 hours. So I'm definitely going to recommend these. And I'm going to put them up on the chart, put them up. That way you can take a look at them. All right. So to be honest with you, Mr. Iconic, I don't need to look at any more trades because I'm pretty much sure if I look at all your losing trades, none of them is going to be aligned with what you told me and what you've drafted for yourself as a trading plan. None of them. I guarantee if I just randomly pick one right now, pick another loser on a different day, it's not going to align with what you said you do. All right, pick anyone. Pick anyone. Try me. All right, let's scroll and scroll and scroll. I have a $315 loss here. This was on, let's see, it was a buy on silver on 12/23. Let's go ahead. We're going to plot that on our charts. So 12/23. And the time you took this trade is 15:43. Let's it go. All right. Boom. let's go ahead and just plot your entry. You entered at 23,833. Let's go ahead and slap that on here. And you bought on this candle 23,833. You had a stop loss at 23.685. You had a take profit. Oh yeah, I know what happened with this one. I know what happened. I didn't ask you shit. Okay, sorry. You had a take profit. Where's your take profit? All right, so take profit at, oh shit, you didn't even have a take profit on this one. So let's just go ahead. We're gonna put something just for. We're just gonna put 1,000 ticks. That way we have something on here. All right. All right, Mr. Iconic. Let's go ahead and see why you took this trade. Right, that's a wide ass stop loss. Why did you take this trade? Okay. All right. So I think on this one, news that came out. Yeah, news came out. Well, did you wait for the market to finish the first 50-minute candle? Because this candle looks like an indecisive candle. And when you see an indecisive candle, you don't necessarily want to trade, right? I'm looking to the left, and I don't see anything that aligns with anything that you told me you wanted to do. Right? If we go all the way down here, looks like you had a possible trade. We had a slight liquidity grab. We had a slight breaker structure in here, but I'm going to go ahead and put it up here since we have this obviously is a structure area. Let's get your fibs. We're going to plot your fibs to the high. Actually, the high up here, because that's where we're seeing that pull back. The market yanked back up, right? You wouldn't have been in any of these trades. Any of these trades. You would have not been in any of these trades right now. Right? Yes, you would have missed out on this initial move, but that doesn't mean that you missed out on everything, because it still probably could have given you some opportunities to trade. And it's okay to miss out on a trade. It's okay. Because from what I can see on the 23rd, you traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trades you took on the 23rd. What's your excuse? What's your logic? What's your logic? The first one, $129 loss. Then you won 195. You probably got cocky. Then there was 60 cents, $5.40. Then you lost $350. Then you lost $192. Then you gained $9. So from what I'm seeing, it looks like you were in profit at some point, didn't take a profit, the market came back, took you out. $24, same thing. Either you closed that shit early or the market took you out. Then you lost $9. Then you lost $51. Then you lost $83. Then you lost $3. You gained $3. Again, looks like you were in profit, didn't take it, market took you out. I've seen enough. So what I really need for you to do is stick to your plan. We're going to be reassessing your trades next week. Tomorrow is Christmas. I need for you to take some time to do some self-healing, because I'm sure you feel like a piece of shit right now because you have people that's depending on you and you're not acting like it. You're being very selfish. That's the honest to God truth. You're being very selfish. You need to do some soul searching. So get your shit together and we're going to reassess at a later date. All right. Okay. Thank you. Yeah. Sorry. Thanks. Bye.